Good morning, my dear friends. In last lecture, we started with a new chapter, liquidation of companies. Hope we completed certain portion as well, right? A quick recap, what we discussed in the previous lecture. So, sir, is there any difference between liquidation and winding up of a company? Liquidation is a procedure, winding up is an event. Once a company wants to go for liquidate, then a liquidator will be appointed. He will start realizing the assets. He will start discharging the liabilities in a particular order. To complete the entire process, it will take some time. At the end of the liquidation, if such liquidator will submit a statement to the approving authority. If the liquidator is appointed by the court, then he may submit such statement to the court. If such liquidator is appointed by the other than court like shareholders or the creditors, then he should need to submit such final statement to such parties. Then the court will pass a winding up order. Then only the company is going to struck off from the database of register of companies. Am I right? So that's why conceptually there is difference between liquidation and winding up. But for this throughout the chapter, for this entire chapter, we may use both the words synonymously. After that, we've seen different types of winding up, right? Compulsory winding up, voluntary winding up. In case of compulsory winding up, due to inability to pay debts, Insolvency and Bankruptcy Code 2016 is applicable. Compulsory winding up, other than inability to pay debts, then Companies Act 2013 is applicable. I mean, at that point of time, the NCLT may order for compulsory winding up. We've seen the certain situations in which NCLT may order for compulsory winding up. May I know such situations? So if the company affairs are against the sovereignty and integrity of the country, so company is incorporated to deceive the public or their affairs are in fraudulent manner, company is unable to file their annual returns for a continuous period of 5 years, that is a just and equitable basis, it is better to close the company rather than continue. Am I right? Certain circumstances we discussed at that point of time. Okay, in case of voluntary winding up, now the current scenario is entire voluntary winding up is in the hands of Insolvency and Bankruptcy Board. That is as per Insolvency and Bankruptcy Code 2016. Before 31st March 2017, Companies Act 2013 is applicable. Sir, even though the major portion of the winding up or liquidation now is in the hands of Insolvency and Bankruptcy Board, but still this chapter we are discussing in purview of Companies Act 2013 only, because we don't know the exact provisions of Insolvency and Bankruptcy Board. You would have learned such concepts in your CF final or in other stages. Okay, but still I discussed certain Insolvency and Bankruptcy Code provisions with respect to the voluntary regulations, right? Am I right, guys? What are such provisions actually we've seen related to the Insolvency and Bankruptcy Code? Whenever a company voluntarily want to liquidate, first it should prove their solvency, because if it became insolvent, then compulsory winding up due to inability to pay debts concept is applicable. That's why it should prove it's there. Liquidity. So to prove such liquidity, board of directors will file an affidavit that company is having no debts or the assets of the company are sufficient to repay such debts. Along with that, they should also file financial statements of the 2 preceding previous years plus valuation report of assets and liabilities. Who should give that valuation report? Registered valuer. At that time I showed, so registered valuer course which is introduced by the ICAI as well, which is an opportunity to our professionals. Then within 14 days of filing such financials and valuation report, it should be approved by the shareholders by passing a special resolution. If at all creditors exist, such financial statements and such liquidation should need to be, the affidavit and such all things should need to be approved by the creditors as well. Then officially we can assume that from the date of passing special resolution by shareholders or from the date of given of the approval by the creditors, we can term it as official liquidation is started. Okay, so then coming IBBI coming to the picture, Insolvency and Bankruptcy Board of India. IBBI will appoint a liquidator Am I right? That is nothing but insolvency professional. Liquidation proceedings started from the date of resolution, and insolvency professional will be appointed by the IBBA, who is known as official liquidator. He will start realizing the assets and making settlement in the particular order, and the final copy will submit to the court. Then the court will pass a winding up order. Then it will intimate to struck off such company to the ROC clearly. Okay. This is the procedure generally we are going to follow in case of voluntary winding up regulations with respect to Insolvency and Bankruptcy Code 2016. All such issues I discussed in the last class, right? Now, sir, the liquidation proceedings with respect to the Companies Act 2013. So now we are discussing entirely such liquidation proceedings in case of compulsory winding up only. Okay, because right now in the voluntary winding up, it is not in the hands of Companies Act 2013. Now, sir, compulsory winding up means, to winding up a company compulsorily, either shareholders or government or the ROC or maybe any other party can file a petition. At the time of filing such petition, Board of Directors should attach statement of affairs. Board of Directors will attach a statement which is nothing but a statement of affairs to the NCLT. Then only NCLT will take that petition, which can be treated as a valid petition. Such statement of affairs contains estimated realizable value of assets and estimated amount to be payable to liability holders. These all are not exact or book values. These are not the market values as well. Just these are the estimated realizable values and estimated amount to be payable to different liability and shareholders according to Board of Directors' point of view. So this statement is highly useful when the NCLT appoints liquidator. This statement is used as a base document for the actual realization of assets and the actual making payment to different liability holders. Then liquidator will be appointed by the NCLT. Then Board of Directors will lose all their rights and duties, and shareholders are particularly known as contributories. Now the entire affairs of the company is within the hands of liquidator. Sir, one thing you need to observe here, sir, once the liquidator is appointed in any business organization means company cannot close its business activities. Company manufacturing process is going on. If trading activities are going on. Yes, all such activities are going on within the purview of the affairs of the liquidator right now. So now the liquidator will observe the entire affairs of the company. So up to the date of feasibility, liquidator will also going to continue the business. Do you understand what I am telling? So because the liquidation proceedings are the process of liquidation, it almost run over the number of years. That's why they can't suddenly shut down the business. Am I right? So then who will pay the salaries to the employees up to the date of winding up? So that is the reason why in generally the companies are still, they are continuing with their trading activities. But right now entire affairs are within the hands of liquidator. Then the Board of Directors send such statement of affairs to the liquidator. Am I right? So such statement of affairs is going to be present in different list. That is different story. We already seen such list. List A, list B, list C, list D, list E, list F. I think so up to list G we've seen, right? Okay, then liquidator will start realizing assets and will make payment to the liability holders. Then in the order of making payment to the different parties at the time of realizing the assets, he may not follow any order, but in generally which order should follow, sir, at the time of realizing assets? That is the practical order. Practical order means first any person will realize the liquid assets. Sir, stock is there, we can realize very easily. So then debtors is there, we can realize very easily. So that's why first we will realize on the basis of liquid basis. I mean, those assets which can be fastly realizable in the form of cash, first we would realize. After that, plant and machinery and property, plant and equipment, remaining all, we can start realizing things. Okay. And we'll make payment to the liability holders as well. So just after realization of all assets and liabilities, liquidator should going to present a liquidator final statement, which consists of a simple receipts and payments account. What are all the different receipts he got through realization of assets, and how he is making distribution to the various liability holders. Just he will make it present as a liquidator final statement. Am I right? That point also I clearly emphasized. Sir, before seeing the liquidator final statement, so first I discussed the different list present in the statement of affairs, that is components of balance sheet. As per the statement of affairs, how the lists are given, just we seen. So assets are broadly categorized into two types: assets not specifically pledged, assets specifically pledged. What is the difference between assets not specifically pledged and assets specifically pledged? Assets not specifically pledged means such assets never offered as a security at the time of availing any borrowing, which are A category assets. We can treat it as a list A. Assets specifically pledged means certain portion of assets or maybe certain assets which might be offered as a security, at the time of availing borrowing. Such assets are particularly known as assets specifically pledged. Okay. Then coming to the creditors, we broadly categorize it into security creditors and unsecured creditors. Again, security creditors with fixed charge and security creditors with floating charge. Now the security creditors with fixed charge also we're going to show under list B only. What is the reason? Now the asset which is offered as a security at the time of availing the loan we shown under list B. Now the borrowing for which the asset is offered as a security, the borrowing for which, the facility for which the asset is offered as a security is also shown under list B. Security creditors with fixed charge means we took certain borrowings, but for such borrowings, security is available. That security is also fixed charge. What is the difference between fixed charge and floating charge? At the time of availing the loan, the security offered, if it is identifiable. I mean, with security you are offering that plant and machinery, that building only. If it is identifiable, then we can call it as which is security creditors with fixed charge only. That's why which is also shown under list B. Okay. So then why list C you are not giving to the floating charge immediately? You know why? Even though preferential creditor is an unsecured creditor, that is unsecured creditors divided into preferential creditors and other unsecured creditors. Even though preferential creditor is an unsecured creditors, we should make repay to the preferential creditors before making payment to the secured creditors with floating charge. That's why preferential creditors are having such a preference. Even though such creditors are unsecured creditors, we should make repayment to the such preferential creditors before making payment to secured creditors with floating charge. That's why I given list C for that is the reason why I am giving list C for preferential creditors, list D for secured creditors with floating charge. Do you understand? Next, then you should make repayment to the other unsecured creditors, then preference shareholders, then equity shareholders. List A ANSP, list B ASP, as well as secured creditors with fixed charge. List C preferential creditors, list D secured creditors with floating charge, then list E other unsecured creditors, list F preference share capital, that is preference shareholders, list G equity shareholders. Now I also discussed the order of payment in case of liquidator final statement. Am I right? That is how a liquidator final statement is going to be present. That is, first we will start with assets not specifically pledged, directly carry forward to the last column of the receipts. Then assets specifically pledged, we may put into the inner column, because the respective liability, that is security creditors with fixed charge, you need to reduce, right? Whenever you are selling such asset, for example, machinery is offered as a security. Whenever you are selling the machinery, then you should first make repayment to the fixed charge, then the remaining amount only you can carry it forward to the last column. Then legal charges in the order of making payment, then liquidation expenses, after that liquidator remuneration, after that preferential creditors, then secured creditors with floating charge, then unsecured creditors, then preference shareholders, then equity shareholders. This is the order of making payment to the different parties by the liquidator. Sir, in this chapter, what we are going to discuss? So actually, at the time of leaving the lecture, just I introduced what are the different concepts we are going to discuss. Statement of affairs, liquidator final statement, overriding preferential payments and preferential creditors, liability of list B contributories. So out of all the concepts, the highest importance we can give to the liquidator final statements. The next importance is overriding preferential payments and preferential creditors. Next is list B contributories. So statement of affairs is not that much of material, but still we will see at the end of the lecture. Okay, that is at the end of the chapter. Shall we start, friends? Up to this part only we discussed in the last lecture. Can I proceed? So please all of you participate. Can I proceed? Let me open the query link also quickly. Just give a moment. I'll check the query link. Yeah. Yes, sir. Proceed, sir. Please, sir. Uh, Sir, one more thing. That is, before proceeding, just I want to tell you one thing. Sir, I'm getting a regular mails from so many students regarding certain queries. Please, all of you, bear with me. All your queries, I'm going to resolve in the last lecture. I will at least take 15 to 20 minutes time to resolve all your doubts, because in between the sessions I unable to take up the queries which were placed in the through mails. In the day one itself, I provided a mail, right? Regularly, I am receiving the mails from the students. So approximately, I got almost 10 to 15 mails. I'll consolidate all such mails and the common queries we can resolve. So maybe the same student having the the different students having the same query, that possibility is also there. So please let me allow to discuss the other things except queries. In the last lecture, I will definitely resolve all your queries. Okay, right. Come back. Now, all of you please concentrate. I will start discussion first with liquidator final statement, guys. Already format is here, exist. I'll discuss with this format only. Concentrate. Now, I'm starting with the liquidator final statement. The discussion itself is start with liquidator final statement. Sir, now the liquidator, after appointment, just he will start realizing assets, right? Just he will start realizing assets. Sir, cash is already in realized form. He need not again realize. So the existing cash balance under asset side is already in realized form, and the cash is always assets not specifically pledged only, because cash we never provided as a security at the time of availing loan, right? So that's why cash you can directly take it. Next, you can check remaining all other assets. You can check remaining all other assets. At the time of checking all other assets, just you need to think only one thing: whether that asset is offered as a security at the time of availing any borrowing or not. So that asset is free from lien. I mean, it is not offered as security, then just you can put it under assets not specifically pledged. If any particular asset is offered as a security, like what I said, machinery is there. The machinery book value, just I'm writing for the time being. Let us assume the machinery book value is there 10,000. Consider all of you here. Just I'm putting the machinery book value is there for 10 lakhs, not 10,000, 10 lakhs. Now such machinery is going to realize by liquidator at the rate of 12 lakhs. Now can I consider 10 lakhs here, 12 lakhs here? This is receipts and payments account, right? Liquidator final statement means this is receipts and payments account. The realizable value only you should need to consider. That is asset specifically pledged. Machinery you should need to consider 10 lakhs here. Less creditors with fixed charge. Sir, let us assume the creditors balance is there for at the rate of 8 lakhs. That is the related borrowings. The related borrowings is there. The related borrowings is at the rate of 8 lakhs. Now still how much surplus I have? 4 lakhs. So that is 8 lakhs. The difference amount is only you can carry it forward to the last column, which is 4 lakhs. I have another doubt. Sir, for example, machinery book value is 10 lakhs exist. Okay, I too agree. But the realizable value is not 12 lakhs, sir. Let us assume the realizable value is at the rate of 6 lakhs. That is also possible. Sir, we may get more than book value, or we may get less than book value, or we may get equal to the book value. So now the realized value is 6 lakhs. But borrowings is how much? 8 lakhs now. Now, is it the security is enough to cover the borrowings? I'm all of you asking, is it the security the realization from the machinery, is it enough to cover the borrowings? No. Still, the deficit is there to the extent of 2 lakhs. All of you, please concentrate here. There is no surplus we are getting from assets specifically pledged. Now the realization from assets specifically pledged is 6 lakhs, but creditors with fixed charge is actually 8 lakhs. Borrowings is 8 lakhs. Now this 8 lakhs you cannot treat it as security creditors with fixed charge. Out of such 8 lakhs, to the extent of the security covered portion only you can treat it as security creditors with fixed charge, which is only security creditor with fixed charge. What about remaining 2 lakhs, sir? Now the to the extent of the 2 lakhs is not covered by the secured portion. Such 2 lakhs you can be treated as unsecured creditor. Unsecured creditor. That is very much important. So that means even though a particular asset is offered as a security at the time of availing any borrowing, there is no necessity to cover the entire realizable value of such security for repayment of the borrowing. Out of such borrowing, how much portion is only covered by the security can only treat as security creditors with fixed charge. The remaining portion of such asset is unable to make it cover the borrowings, then we can treat it as unsecured borrowings only. Unsecured borrowings only. I mean, now you can reduce creditors with fixed charge. Creditors with fixed charge at the rate of 6 lakhs only. 6 lakhs minus 6 lakhs, how much? Now the surplus will become nil. What about remaining creditors, sir? The remaining creditors you should need to make payment at the time of making payment to unsecured creditors. Do you agree, all of you? That's why you need to check the realizable value of the asset is more than book value. The realizable value of the asset is enough to cover the borrowing, or it is not enough to cover the borrowing. If it is enough to cover the borrowing and the surplus can be carried forward to the last column. If it is not enough to cover the borrowing, up to the extent of the coverage, you can term it as a security creditors with fixed charge. The deficit portion, that is the portion which is not covered by the security, you can call it as unsecured borrowing. Okay, fine. Next. Sir, now on the hands of liquidator, he has certain cash, right? Now he will start doing payments. First, he will make payment to legal charges, right? He will start making payment to the legal charges. Sir, what is the meaning of legal charges? I already told you. If any of the court fees are there, if any of the stamp duties are there, okay, if any of the fees should be need to be payable as per the Companies Act 2013 at the time of making petition, okay, such all things are coming under legal charges that should be incurred in the first and foremost instance. Next, liquidation expenses. Sir, liquidation expenses, we can call it as certain liquidation formalities inside we are following. I mean, how I can tell? Sir, whenever a liquidation proceeding started, am I right? Now, board of directors will lose their right. Board of directors should prepare the statement of affairs as right. Maybe a valuer, a registered valuer should be appointed for the purpose of valuation of assets and liabilities. Such all things need to be happen, right? Then who will pay amount to such parties? All such things are known as liquidation expenditure. So in relation to the liquidation, what are the expenditure we incurred? Such expenditure is known as liquidation expenses. Okay, next, liquidator remuneration. All of you, please come to the liquidator remuneration. Now I am going to explain the concept of liquidator remuneration below, which is important, guys. Liquidator remuneration. Sir, liquidator remuneration can be payable in two forms. We can offer liquidator remuneration on the basis of realization of assets, or we can offer liquidator remuneration on the basis of payments made to creditors or shareholders. I mean, a certain percentage is decided at the time of appointment itself by the approving authority. Then, if the liquidator remuneration is based on the realization of assets, that is simply, for example, both assets not specifically pledged plus assets specifically pledged. Let us assume we get 10 lakhs. The remuneration is at the rate of 10%. Let us assume. Now he will get 10 lakh into 10%. He will get 1 lakh as remuneration. On the basis of realization of assets means those assets he is going to realize. On such assets only we will give. Sir, here assets specifically pledged, you should take it over at gross figure. Why? Because he is realizing all such assets, right? And assets not specifically pledged, we should not take the cash because cash was already in realized form. What he will realize. So only the realized assets only I can consider according to the problem. Or maybe sometimes he is specifically mentioned on such portion of assets realization only we will offer the liquidator remuneration. Then I can take the such assets realization portion only. Simply the value of the assets realization, you can apply the given percentage, then you can get liquidator remuneration. Next, coming here, on the basis of payments made to creditors or shareholders. On the basis of payments made to creditors or shareholders. Now, I will deal this situation in two types. Concentrate. Sir, for example, if sufficient cash is available, if sufficient cash is available to repay all parties, including shareholders, all. So liquidator have enough cash to repay all parties and shareholders. Then at that point of time, sufficient cash is available. So just like that, we will check that payment made to different parties. Payment made to different parties. So payment made to different parties means he is telling only creditors. That is preferential creditors, secured creditors with fixed charge, secured creditors with floating charge, and preference shareholders and equity shareholders. How much amount you are paying, you will check. Then payment made to different parties. With that, you can simply multiply with percentage of commission you are offering. Then you will get liquidator remuneration. Such an easy process. Just in the problem, for example, it is simply given that liquidator remuneration is offered on the basis of amount payable by liquidator to shareholders. Let us assume only shareholders. Then I will check to preference shareholders how much you paid, to equity shareholders how much you paid. On that I will simply apply the percentage. Am I right? Or maybe it is simply given that liquidator remuneration is payable on amount payable to preferential creditors and secured creditors with floating charge. Then how much amount I paid to secured creditors with floating charge and preferential creditors I will check. On that I will apply the percentage. Such a simple issue. But the problem arises in which case if cash is not sufficient. If cash is not sufficient to repay, cash is not sufficient to repay all parties. So if the cash is not sufficient to repay all parties, then how would you tackle the situation? I will give an example for better understanding. Please concentrate. For that situation, I am giving an example. Sir, liquidator remuneration, this is an example. Liquidator remuneration payable at the rate of 3% on amount paid to secured creditors with floating charge. So this is the terms and conditions agreed with liquidator for payment of liquidator remuneration. Now all of you please concentrate. So the secured creditors with fixed charge in my books of accounts, secured creditors with fixed charge. Is it fixed charge or floating charge? Sorry. Secured creditors with floating charge. I have 5 lakhs in my books. I need to pay 5 lakhs. But cash availability with me with the liquidator, cash availability is there only 3 lakhs. Now, can you please all of you participate? The available cash, is it sufficient to repay the entire amount to secured creditors with floating charge? No. The cash itself is not sufficient to make repayment to secured creditors with floating charge. Now, with the cash availability of 3 lakhs, you should need to make 2 payments. You know, one payment is secured creditors with floating charge. So whenever you are making any payment to secured creditors with floating charge, you should need to make payment to liquidator remuneration as well. For example, if entire 3 lakhs, if you pay to the secured creditors with floating charge, where is the cash on the hands of the liquidator to make payment to the liquidator remuneration? That's why, no doubt about it, the entire 3 lakhs is unable to make repayment to the secured creditors with floating charge. Then, if you know the liquidator remuneration, for example, if you know the liquidator remuneration, the remaining portion simply he can make payment to the secured creditors with floating charge. But how much is the liquidator remuneration? We don't know. Because to know the liquidator remuneration, first you have to find out how much amount you should need to be payable to secured creditors with floating charge. 2 are completely unknown figures. Then at that point of time, what we will do, please all of you concentrate. Let us assume cash available after liquidator remuneration but before secured creditors with floating charge is equal to 100. Just I am making a small assumption. I don't know such figure, right? This is the unknown figure. What is the unknown figure? If you know the cash available after liquidator remuneration but before secured creditors with floating charge, just you will make repayment such amount to the secured creditors with floating charge. Now on such value only liquidator will get remuneration. On such value, sir, liquidator will get remuneration at the rate of 3% on amount paid to secured creditors with floating charge. Now amount payable to secured creditors with floating charge, how much? 100 only. If you are paying 100 rupees to the secured creditors with floating charge, then liquidator remuneration is 100 into 3%, which is equal to 3 rupees. Now, can you please tell me cash available before making payment to liquidator remuneration as well as before making payment to secured creditors with floating charge, how much? 103, which is equal to 3 lakhs only. This is the cash availability before making payment to secured creditors with floating charge as well as liquidator remuneration. That means 3 lakhs is equal to 103, or I'll put like this. 3 lakhs is equal to 103. Then for liquidator remuneration, how much? You can make a cross check here, all of you. 3 into 3 lakhs divided by 103. The formula is 3 into 3 lakhs divided by 103. Am I right? So I got here 8,738. 8,738 rupees is the liquidator remuneration. Then once you get the liquidator remuneration, 3 lakhs minus 8,738, then you will get amount payable to the secured creditors with floating charge very easily. So just I am drawing the formula here from this entire case. What is the formula, sir? The formula is cash available with the liquidator is 3 lakhs, right? Cash available with the liquidator into percentage of commission divided by 100 plus percentage of commission. When this formula is applicable, if the cash is insufficient to make repayment to the entire portion of the creditors, then how to calculate the liquidator remuneration? Cash available with liquidator into percentage of commission divided by 100 plus percentage of commission. So like this, you need to calculate liquidator remuneration very cautiously. Most of the times you will directly give the liquidator remuneration, but if the cash is insufficient to make repayment to all the liability holders, then you should calculate the liquidator remuneration as cash available with the liquidator into R by 100 plus R percentage. Sir, whenever that comes in the problems, I will not explain this whole story again. Simply I'll put the formula, but just now I derived how such formula came through a small illustration. Do you agree, guys? Okay. So next, sir, liquidator remuneration is also over, sir. Then next, to whom you should need to make payment, sir? Preferential creditors. Next, to whom I should make to payment? Preferential creditors. Sir, now, who are preferential creditors? What is the meaning of overriding preferential payment also? So if you check here in the overview, where it is, just a moment, where the overview here, I told you we are going to discuss overriding preferential payments and preferential creditors concept at later. I told you, right? So just please let me allow to discuss the further issues by skipping the preferential creditors. We are again discussing as a separate component. So that's why I don't want to discuss what exactly the meaning of preferential creditors. But you know one thing, preferential creditors should be payable before making payment to security creditors with floating charge. That part is more than enough for the time being. I will discuss, if you allow 5 to 10 minutes, I will again come back to the preferential creditors and as well as overriding preferential payments. Both the concepts I will explain. For the time being, we are skipping the preferential creditors. But we know only one thing, it should be payable before making payment to security creditors with a floating charge. Okay, the next order is security creditors with floating charge. Sir, maximum number of times the security creditors with floating charge are covered by debentures, guys. In generally covered by debentures. Why I mentioned debentures as security creditors with floating charge? Most of the times, whenever debentures issued by the company offered the entire portion of the assets as a security. Floating charge means we are not offering as a particular asset as security. The group of assets just we offered as a security. Which asset we are offering the security we will not mention. Like that we will mention buildings. Sir, the entire portion of plant and machinery is offered as a security. Or maybe all the assets which are existing under PPE will offered as a security. Like that we will mention, which is nothing but security creditors with floating charge. Now the question coming into my mind is, sir, principal portion of the debentures, no doubt about it, which is a security creditors with floating charge. Then what about interest portion of the debentures? What about interest portion of the debentures? Sir, interest portion of debentures, I can be divided into two types. Consider here. I can divide it into two types. So one is interest up to beginning date of liquidation. Beginning date of liquidation. Interest from beginning date of liquidation to date of settlement of debentures. Date of settlement of debentures. Now concentrate. Interest portion of debentures, we are going into two parts. One is up to the beginning date of liquidation. Sir, I mean, let us assume the liquidation is going to occur. The liquidation is going to occur as on 1st April 2021. This is the liquidation date, let us assume, which is 1st April 2021. Sir, interest on debentures is outstanding since last 6 months. Interest on debentures is outstanding since last 6 months, let us assume. Now this 6 months interest up to the beginning date of liquidation, we should need to repay along with the debenture holders, principal. Now the interest outstanding up to the date of liquidation on such debentures, you should need to repay along with the debenture holders. Now from the date of liquidation to the date of settlement of debentures, sir, liquidator will settle all the liabilities in a particular order, right? Now when the time comes to make repayment to the debentures, it almost took, let us assume, it almost took 31st December 2021. Almost it took 9 months, let us assume. To make repayment to the debenture holders, it took 31st December 2021. We are already in the process of liquidation. Now the question is, sir, can I repayable that 9 months interest to the debenture holders? Is it mandatory, sir? The liquidator should need to payable the interest portion from the date of liquidation to the up to the actual date of settlement to the debenture holders, provided the company is solvent. Provided the company is solvent. So what is the meaning of solvency? You know already, solvent means if the company is able to make repayment to all the other debt holders, all the other liability holders, then we can said to be companies become solvent. But when you can know whether the company is solvent or not, how you can know whether the company is solvent or not? Sir, you will know your company is solvent or not after making repayment of all the liability holders. I mean, after legal charges, liquidation expenses, liquidator remuneration, preferential creditors, secured creditors with floating charge, and unsecured creditors. After that, still liquidator will have cash. Any amount. After the making repayment of unsecured creditors, still liquidator is end up with certain cash on his hand. Then we can set to be the company is a solvent, right? Because what is the meaning of solvency? Company is able to repay all their debts, all their outside liabilities with the available cash through realization of ANSP and assets specifically pledged. Then after making payment of unsecured creditors, still I have a cash balance. Then we can assume that company is a solvent. Then you should need to make repayment of the interest portion from the date of liquidation to the actual date of settlement of the debentures. Do you agree? So now, debentures are generally covered under secured creditors with floating charge. The principal portion of the debentures we should need to pay at the time of making payment to secured creditors with floating charge. Now, what about the interest up to the beginning date of liquidation? That interest portion should also be need to pay along with the principal portion of the debentures. And the interest from the date of liquidation to the actual date of settlement of the debentures, the liquidator should need to pay only when the company is a solvent. When we can know the company is a solvent or not, after making repayment to the unsecured creditors, still if a company having any balance, we can set to be company is solvent. Okay. Now concentrate. The next issue. Sir, I mean, unsecured creditors with floating charge at the time of presentation, how we will present, you know? That is principal first you may present, no doubt about it. Then interest up to liquidation date you will present. After that, interest after liquidation date you will present here only, but you should need to make payment after making payment to the unsecured creditors. For the presentation requirement, you will present under the secured creditors with floating charge only. At the time of discussing the debentures only, we will present. But at the time of payment, after making payment to the unsecured creditors, still liquidator having a balance, then only he will make payment to the interest portion after liquidation, but before making settlement of debentures. Do you agree? All are you following with me, guys? All of you following with me? Okay. So this is the things related to secured creditors with floating charge, guys. Then you will make payment to unsecured creditors in the as usual order. Next, all of you please come to preference shareholders. Please come to preference shareholders. The next question coming into my mind is, sir, is it arrears of preference dividend? Is it arrears of preference dividend need to be payable during the process of liquidation? You know, if the preference shares are the cumulative preference shares, in generally companies having sufficient profits, then only company have an obligation to pay. But right now we are in the liquidation process. Can you please all of you tell me, is there any obligation by the liquidator to make repayment to the arrears of preference dividend to the preference shareholders? Sir, arrears of preference dividend should need to be payable to the preference shareholders if and only if articles of association have a provision that at the time of liquidation of company, the liquidator should need to be payable to the preference shareholders. If articles of association having a provision for payment, then only we can pay. If articles of association is silent about making payment to the arrears of dividend to the preference shareholders, then liquidator no need to pay. But for our academics, whether it is mentioned or not, we can presume that such provision is such provision is exist in articles of association. Accordingly, arrears of preference dividend we need to pay before making payment to the preference shareholders. This arrears of preference dividend we should need to make pay before making payment to preference shareholders. I mean, after making payment of unsecured creditors, before making payment to the preference shareholders, first I will pay any of the arrears of preference dividend is exist. Then I will make sure that I'll make payment to the preference shareholders. Now all of you concentrate. Sir, the existing preference share capital is there. The shares are 1 lakh. Face value is 100, but we collected only 80 rupees from each and every shareholder. We have 80 lakhs. And equity share capital is there with me. Again, 1 lakh equity shares. Face value is 10 rupees, but I've only collected 6 rupees per share. That is 6 lakhs. Now my question is, please all of you observe, these are very, very important points. Now my problem is, creditors which are exist, creditors, which creditors you can talk, unsecured creditors I am talking, unsecured creditors existing with me to the extent of 10 lakhs. To the extent of 10 lakhs. That is the issue. But cash available with the liquidator, the availability of the cash with the liquidator is only 2 lakhs. Then can you please tell me, liquidator is able to make repayment to unsecured creditors right now completely? No, because the cash availability with the liquidator is only 2 lakhs, but the amount payable to the unsecured creditors is to the extent of 10 lakhs. Then how he can repayable? Still 8 lakhs gap is there, na? Still 8 lakhs gap is there, na? Here 8 lakhs is required, na? Now, if your company is having partly paid up shares, either in case of preference shares or either in case of equity shares, then liquidator have a right to make call. Then liquidator have a right to make call from the partly paid up equity or the preference shareholders. Sir, first liquidator can make a call to the equity shareholders or preference shareholders. So preference shareholders will have a preferential right at the time of receipt of money. But at the time of making payment, always first we should need to ask equity shares only. Then if the cash is insufficient to make repayment to unsecured creditors, then we will ask money from equity shareholders first to the extent of unpaid value only. If you observe here, the paid up value is 6 rupees, but the face value is 10 rupees. Out of such 10 rupees, unpaid value is how much? 4 rupees. Now, liquidator will collect such 4 rupees from the equity shareholders. Then the cash availability will becomes, that is 1 lakh into 4 rupees, 4 lakhs. Then the cash availability will become how much? 2 plus 4 lakhs, 6 lakhs. Now still how much I required? Still 4 lakhs. Now such 4 lakhs we can ask from the preference shareholders. Now the preference shareholders, we have 1 lakh. Sir, the unpaid value is 20 rupees, but no need to ask entire 20 rupees. I required only 4 lakhs, 1 lakh preference shareholders are there. We can only ask at the rate of 4 rupees per share. Now we will ask preference shareholders at the rate of 4 rupees per share. Then I will get another 4 lakhs from the preference shareholders. Now I got 10 lakh with the liquidator. Such 10 lakhs you can need to make payment to the unsecured creditors. So what conclusion I'm drawing here? Whenever the cash is insufficient to make repayment to the existing liability holders, then the liquidator can make a call if the partly paid up shares are exist. Such partly paid up shares may be equity shares or such partly paid up shares may be preference shares, whatever the case may be. And another issue I'm telling, for example, cash is sufficient to make repayment to unsecured creditors, but cash is insufficient to make repayment to the preference shareholders. That scenario may also occur. Now cash is sufficient to make repayment to unsecured creditors. Let us assume cash is insufficient to make repayment to preference shareholders. Sir, now partly paid up equity shares are there, sir. Can I make a call? Absolutely. Why? Because the existing cash is insufficient to make repayment to the preference shareholders. Then if partly paid up equity shares are there, then liquidator can make a call to the existing partly paid up equity shares. So according to the contribution, he can make repayment to the preference shareholders as well. So now I will discuss certain important issues, guys, that is related to distribution of cash among equity shareholders. Distribution of cash among equity shareholders. Concentrate, all of you. So let us assume there are three different types of shares are exist in my company. That is different categories: category 1, category 2, category 3. Let us assume. So the number of shares are category 1, 1 lakh, category 2, 50,000 shares, and category 3, 25,000 shares. I'll put like this: just 1 lakh 50,000, 1 lakh 50,000 shares are exist. Like this category. Face value for each share is at the rate of 10, 10, 10 only. Paid up value, category 1 shareholder paid up value is 10 rupees fully paid up. Category 2 shares paid up value is 6 rupees. Category 3 paid up value is 5 rupees. Like this, paid up value is different. Now, cash available with the liquidator. Cash available with the liquidator is only 5 lakhs. Now I need to distribute such 5 lakhs among the equity shareholders. Now I need to distribute such 5 lakhs among the equity shareholders. How you can need to distribute such 5 lakhs among the equity shareholders? That is the question here. Sir, you can simply distribute such 5 lakhs among the equity shareholders. That is 1 lakh plus 50,000 plus 1 lakh 50,000, total 3 lakhs. Now 5 lakhs divided by 3 lakhs. You can make it present per each equity shareholder how much he is getting. Just make it distribute now. Such as a simple task now. No. Because here the paid up value is different. He contributed 10 rupees, but he contributed only 6 rupees, but he only contributed 5 rupees. For each and every equity shareholder, how you can distribute the equal money? Can you please tell me? And one more important thing, sir, here category 2 is partly paid up shares, category 3 is also partly paid up equity shareholder. The liquidator can have a right to ask money from such shareholders as well. Do you agree, all of you? So that's why distribution of such 5 lakhs is important task here. How we are going to distribute? Let us have a look. Now all of you concentrate. Can you please tell me what is the total face value? What is the total face value? Total face value is 1 lakh into 10 rupees, which is 10 lakhs. 50,000 into 10 rupees, which is 5 lakhs. 1 lakh 50,000 into 10 rupees, which is 15 lakhs. Total is 30 lakhs. So just I am putting this is the total column. Total is 15 lakhs. Sorry, 30 lakhs. Total is 30 lakhs. Am I right? What is the total paid up value? Total paid up value. 1 lakh into 10 rupees, 10 lakhs. 50,000 into 6 rupees, 3 lakhs. 1 lakh 50,000 into 5 rupees. How much? 7 lakh 50,000. So the difference is how much, guys? That is, sorry, the total is how much? 10 plus 3, 13. 13 plus 7 lakh 50,000. 20 lakh 50,000. Now, between the face value and the paid up value, how much difference is there? Between the face value and paid up value, how much difference is there? Almost 9,50,000. So loss, expected loss, just expected loss due to liquidation, that is 2,05,000. Such 2,05,000 you need to distribute in, you should need to distribute in their capitals ratio. You should need to distribute in their capitals ratio. That is, capitals ratio are nothing but number of shares ratio. Both are same here. So the number of shares, all are having equal face value now. All are having equal face value. So now which is the loss? Such loss you can distribute in such shares ratio. What is such ratio, guys? I can put 10:5:15. You can make it simple, right? 2:1:3. 2:1:3. Now 2,05,000 into 2/6, which I got 68,333 here. 68,333. Next, here, what we are distributing, right? We are distributing the expected loss only, right? Okay, correct only. Next, please check here. 2,05,000 into next ratio 1/6. How much it is? 34,167. Please, all of you, make it calculate from your side as well. Next, 2,05,000 into 3/6. I'm getting 1,02,500. So if you can make it total, it should need to be equal to 2,05,000. Now, after distribution of losses, can you please check how much balance of paid up value you are paying? This is loss now. From out of 30 lakhs, you are getting, sir, is it 2,05,000 or 20,50,000? Yeah, it is 20,50,000. I'm so sorry. So that's why only I'm checking. It is 20,50,000. I mean 110 will come, right? 68,333 here. Sorry. 6,83,333 here. Here 34 lakhs 16,000. Let me calculate one more time. So just I oddly make it wrong here. So 20,50,000 into 2/6, which I got exactly 6,83,333. That is correct. 20,50,000 into 1/6. I got here 3,41,667. Next here, guys, 20,50,000 into 3/6. Here I got 10,25,000. Now, which is equal to 20,50,000. Am I right? Do you agree, guys? All of you. So the difference, the face value is 30 lakhs and the paid up value is only I'm having 20,50,000. Now the difference is how much here? 10 lakhs minus 6,83,333. 6,83,333. So I got here 3,16,667. Here 3 lakhs minus 3,41,667, which is equal to 41,667 negative. Here 7,50,000 minus 10,25,000. Here also got negative 2,75,000. Sir, what is this meaning, sir? What is this means? Now the problem is, for you, the problem is how you need to distribute the cash of 5 lakhs. That is the only problem. Now the issue is, category 2 shareholders should contribute 41,667. 41,667. Category 3 shareholders should contribute 2,75,000. Now the liquidator will make a call. Then accordingly, they should need to contribute. Then the total cash available with us, how much? The total cash available, how much with us? 5 lakhs plus 41,667. 667 plus 2,75,000. So the total cash available is 8,16,667. But here we are not getting 8,16,667 now. Just a moment, guys. Somewhere we made. So here just the cash not available with the liquidator. Just make it close. Then it will be matched. Just a minute. Then you can make it total. How much it is? 3,16,667. Am I right? Yes. So let us assume cash available with the liquidator is 0 for the time being. For the time being, cash available with the liquidator is 0. Now from this, what you can understand, category 2 shareholders should brought 41,667 cash, and category 3 shareholders should bring 2,75,000 worth of the cash. Then with the liquidator, 3,16,667 worth of cash is available. Such 3,16,677 cash, he can give it to the category 1 shareholders. He can simply give it to the category 1 shareholders. Sir, distribution of cash among the equity shareholders. How we are in generally distribute cash among the equity shareholders if different paid up values are there. Sir, if the equal paid up values are there, then we can simply make it distribute equally to all the equity shareholders. Then our burden is so much of easy. Our burden is not at all exist. But if different paid up values are exist, let us assume if different paid up values are exist, then distribution is quite difficult. At that point of time, you can compare the total face value of the equity shares with total paid up value. The difference you can treat it as expected loss. Such expected loss you can need to distribute in the ratio of the number of shares. Then you will get how much portion whether we can payable to the equity shareholders or how much portion such shareholders should need to contribute to the company. We can know if negative figure come, they should need to contribute. If positive figure come, we should need to pay. Now in the given case, if you observe category 3 shareholders, they should need to contribute 2,75,000. Category 2 shareholders, they should need to contribute 41,667. Total we get 3,16,667. Such 3,16,667 we can make it payment to the category 1 equity shareholders. So like that, in generally the making of payments will going to happen in between the equity shareholders. This is the concept of distribution of cash among the different equity shareholders if equal face value they are having but different paid up value. And one more case is there, guys. One more case is there. I will tell you that case after the break. What is that case? First I am putting here. Face value is different and paid up value is also different. Now we see the case is, if you observe here, the case is face value is same, but the paid up value is different. Now after the break, we are going to see face value is different and paid up value is also different. Okay, please all of you take break for 10 minutes. So the time is exactly 8:03. You can take the break up to 8:13. Okay, guys. Yeah, welcome back, guys. So many persons are asking, sir, why we need to reduce expected loss here? So first you need to understand one thing, guys. Sir, the existing total paid up value of all the equity shareholders is 10 lakh, 3 lakh, 7 lakh, 50,000. Am I right? But for 1 lakh equity shareholder, the shares are fully paid up. The shares are fully paid up. And for category 2 shareholders, the shares are only partly paid up. The category 3 shareholders, the shares is only to the extent of 5 rupees only partly paid up. Then there is a necessity to ask money from category 2 and category 3 shareholders. Because such shares are partly paid up, still to become 10 rupees paid up value, here 4 rupees we need to ask. Here to become 10 rupees paid up value, here we need to ask 5 rupees per shareholder. So expected loss means if really is liquidation is going to occur, out of the face value, how much they is getting the loss. Out of the face value, how much they are getting the loss. If you check here, out of the 10 lakhs, they are getting the loss of 6,83,333. They are only getting 3,16,667, only the surplus. That means even though they paid 10 lakhs, they are losing to the extent of 6,83,333. But here, if you check, they only paid 6 rupees only. They only paid 6 rupees. If I distribute right now itself, they are getting a benefit of 41,667. They are getting a benefit of 41,667 because the total paid up value paid by them was 3 lakhs, but they are ending with 41,667. That's the reason why we are asking to contribute to the extent of that amount first. So just this situation, how we are going to arise. I'll take one example for better understanding. Okay, why you should consider the comparing with face value with paid up value, or without taking example, I will take up a problem. Then I can make realize the concept why we are doing like this with that problem. That is the better idea. So I don't want to take the next model right now itself. I will take one problem first. So sir, why you are comparing the face value with paid up value? Why you are recognizing the expected loss? All such issues you can easily understand with that problem. Okay, please let me take up that problem through my text. That is the better idea, I think so. So just please allow me some time. You will definitely understand why we are comparing, why we are distributing such expected loss among the various different categories of the shareholders. The problem number is, I included here, no worries, which is problem number 6. All of you please come to problem number 6 on our text. First, let me explain this problem. Then all your myths will going to resolve. Sky Limited went into liquidation on 1st April 2011. Following are the details regarding the share capital of the company. 20,000 equity shares of rupees 100 each, 75 paid up. 30,000 equity shares of rupees 100 each, 40 paid up. 80,000 equity shares of rupees 100 each, 65 rupees paid up. Surplus available with the liquidator, that is simply cash available with the liquidator, after discharging all liabilities is 20 lakhs. Now cash available with the liquidator is to the extent of 20 lakhs only. Distribute this surplus money among different categories of shareholders. Now all of you please come here. So problem is problem number 6, right? I'm going to explain this problem in 2 different methods. In method number 1, we already seen. I will adopt method number 2 to problem number 6. In another method also I'm going to do. Then you can understand why in method number 1, we will compare the face value with the paid up value, why the expected loss need to be distributed to ultimately get the distribution of the surplus among different categories of shareholders. So here total 3 categories of shareholders are there, right? Particulars. Now this is method number 1. Method number 1. Okay. Particulars, category 1, category 2, category 3. These are total 3 categories, guys. Now here, first let us start with number of shares. So number of shares 20, 30, 80. Okay. Then total face value, directly writing the total face value. Sir, if you check the total face value, which is 100 into 75, right? 100 into 75, how much? Sorry. Face value is 75, 20,000 into 75, how much? Or you can write the individual face value as well. No worries. Face value per share. Per share is 75, 40, 65. Then you can get the total face value. Total face value. Come on, friends. All of you calculate along with me. 20,000 into 75, which is 15 lakhs. 30,000 into 40, which is 12 lakhs. Here 80,000 into 65, which we get 52 lakhs. Am I right? So number of shares and paid up value exactly we wrote, right? Next. Total paid up value. This is face value or paid up value, guys? Sorry, our face value is in all there 100. Just a minute. Don't worry. Just I will convert it as a paid up value. Total paid up value. Just a second. Wrongly mentioned. I'm completely in different mode. Sorry. Okay. So total face value. Just make it rub. Today actually I have a board meeting. I need to attend one board meeting. So just my mind is completely in that mode. But no worries. I will concentrate. I'll make sure to concentrate here. So total face value 20,000 into 100. Here it is 20 lakhs. So 30,000 into 100, which is 30 lakhs. 80,000 into 100, which is 80 lakhs. So now the total is 20 plus 30, 50 plus 80, 130 lakhs. So the total paid up value is how much? Total paid up value 15 plus 12 plus 52. It is equal to 79 lakhs. Am I right? Sure, guys? Which is 79 lakhs. Total face value is given 130 lakhs. Total paid up value is given 79 lakhs. Now, as per our concept, expected loss is how much? 130 minus 79 lakhs. 51 lakhs. You should need to distribute such 51 lakhs in the number of shares ratio, that is 2:3:8 ratio. Can you please all of you make distribution? Here 51 lakh into 2/13. You got 7,84,615. Am I right? Here 51 lakh into 3/13. Here I got 11,76,923. Here 51 lakh into 8/13. Here I got 31,38,462. So now the total difference is 51 lakh, right? Which is the total loss I distributed. Now paid up value minus loss. How much here? 15 lakhs minus 7,84,615. The difference is 7,15,385 here. 12 lakhs minus 11,76,923. Here I got 2,23,072. Sorry, 23,077. Now here I got how much? 52 lakhs minus 31 lakh, 38,462. 20,61,538. But I think so the calculations parts is wrong. Why? Because we have a surplus cash of 20 lakhs, right? But where that such 20 lakhs is coming? The 20 lakhs is not coming here. So just give a moment, guys. All of you, let me open the printed solution. Somewhere we made some mistake. Maybe. Just give a second. Please, all of you, bear with me. What happened here? So can you please check the paid up share capital? Is it calculated wrongly by us? Oh my God. So the expected loss, I made it wrongly. Sorry. Yeah. This is not 51 lakhs. That's correct. Now in the earlier problem, just the example, in the example, the surplus I take a nil. Just a second. In the earlier problem, surplus is nil. If the surplus is nil, then paid up value is 20 lakhs 50,000. If the surplus is nil means the total is the expected loss. The entire loss itself is the 20 lakh 50,000. Why? Because liquidator is not getting any single rupee to distribute among the equity shareholders. Entire loss is 20 lakh 50,000. But here in this problem, surplus is given. Surplus, how much is given in the problem? Surplus 20 lakhs is given. If you took here surplus 20 lakhs, now we have the total paid up value is 79 lakhs. We are already having a surplus of 20 lakhs means what is the difference? The difference is 59 lakhs. Expected loss is 59 lakhs. Now hope you understand how the expected loss is coming. The total paid up value is 79 lakhs, but the surplus having with the liquidator is only 20 lakhs. But we are unable to make repayment to the entire paid up capital, right? So to the extent of 20 lakhs only is available with the liquidator. So still the remaining balance of 59 lakhs is unable to make repayment by the liquidator to the shareholders. Such is nothing but the expected loss. Sir, but in the earlier problem, why you can directly distribute 20 lakh 50,000 among the various equity shareholders? The reason is at that point of time, I can assume that surplus is nil. There is no balance exist in the hands of the liquidator. That is the reason why I can simply distribute 20 lakh 50,000. The entire amount of the paid up value is loss at that point of time because surplus is nil. Then I made a distribution. But here in this problem, just given that surplus is 20 lakhs, so the paid up value is 79 lakhs. So the expected loss is only 59 lakhs. If you want, you can make it bracket. Open the bracket. Paid up value is 79 lakhs and the surplus is 20 lakhs. The difference is 59 lakhs. Then this calculation would change, guys. All of you. Please calculate the correct figures. Here, I didn't consider the surplus previously. That is the reason. Now, 59 lakhs into 2 by 13. Here I got 9 lakh 7,692, guys. Here, 59 lakh into 3 by 13. Here I got 13 lakh 61,538. Here, 59 lakh into 8 by 13, which is 3 lakh 63,770, I think so. So now, if you can cross check what is the expected loss, 59 lakhs. The expected loss is 59 lakhs. If you can make it total, it should need to be equal to the 59 lakhs. Is it equal to 59 lakhs? Can you please cross check? If you can make it total, it should need to be equal to 59 lakhs. 36 lakhs 30,770 plus 13 plus 9 lakhs 7,692. The total equal to the 59 lakhs. Now, the difference paid up capital 15 lakhs minus 9 lakh 7,692. So I got the difference as 5,92,308 here. Here surplus means we need to pay out of 20 lakhs. We need to pay 5,92,308. Then 12 lakhs minus 13 lakh 61,538. Here we got 1 lakh 61,538. Here 52 lakhs minus 36 lakh 30,770. Here I got 15 lakh positive, right? 15 lakh 69,230. Sir, what is the meaning of this? Please all of you concentrate. What is the meaning of this net distribution? Sir, the surplus in the hands of the liquidator is 20 lakhs, right? Now we are asking category 2 shareholders to bring the cash. Negative figure means to bring the cash. Now if they bring the cash 1,61,538, then we end up with 21 lakh. Then we may end up with 21 lakh 61,538. which is 21,61,538. Now, out of this 21,61,538, we should make repayment to category 1. Category 1, 5,92,308. We should make repayment to category 3, 15,69,230. If we can make it total, it should be equal to 21,61,538. That means how you should need to distribute 20 lakh among the equity shareholders means, first you need to ask category 2 shareholders to the extent of 1,61,538. Then it will become 21,61,538. Then you can make it distribute to category 1, 5,92,308, and remaining portion to category 3. Sir, please all of you concentrate. The same problem, just I want to do it in another method for better understanding, nothing else. This is method number 2. This is method number 2. What is this method number 2, sir? Sir, can you please tell me, here 20,000 equity shares, here 20,000 equity shares, paid up value is given 75, right? Just I'm mentioning here, paid up value is 75. For category 2, paid up value is 40 rupees. For category 3, paid up value is 65 rupees. Category 3 paid up value is 65 rupees. What I will do one thing. Sir, for example, from category 2 and category 3, if I make it paid up value as 75 rupees, then I can distribute all the equity shareholders equally. Please, all of you, concentrate. If I make category 2 and category 3 shareholders also the same paid up value as like category 1, then the surplus amount we can make it distribute equally. I want to change the 40 rupees paid up value into 75, as well as I want to change 65 rupees paid up value into 75 rupees. Sir, to become 40 to 75, I need to make a call. To become category 3, 65 to 75, I make a call. Now, what I should need to do, now I have a surplus balance with the hands of the liquidator is 20 lakhs. Now I am making a notional call. This is not a real call. Just for namesake, if I make a call, what happened? I will check. Notional call. If I make a call, how much? 35 rupees from category 2. 35. That is 35 into how many number of shareholders are there? 30,000. Less. From category 3 shareholders, if I make a call for 10 rupees, then it will become 80,000 into 10. Then liquidator will have how much cash balance total? First, let me know the notional call amount. 35 into 30,000, which is 10,50,000 plus 8 lakhs. 18,50,000. Am I right? Notional call is 18,50,000. Do you agree, all of you? This calculation is correct only, right? Now the total cash available is with the liquidator 38,50,000. This is the total cash balance available with the liquidator. Now this 38,50,000, I can distribute to all the categories equally. Per share I am talking. Per share I am talking. I can equally distribute. What are the total number of equity shares? 20, 30, 50, 50, 80, 130. 130. Now here I will start make distribution to the different category people, which is category 1, which is category 2, and which is category 3. Now this 38,50,000 portion, you can make it simply distribute on their particular shares ratio, that is 2:3:8 directly, right? Equally only, but equally means according to their shares contribution only we will distribute, right? That is 2:3:8. Now you can please check 38,50,000 into 2/13. Here they will get 5,92,307. Am I right? 5,92,307. Correct only, right? That is, make it approximate figure. 5,92,308. Here 38,50,000 into 3/13. Here I got 8,88,462. Here 38,50,000 into 8/13. Here I got 23,69,230. Yes, 230. Now, if you observe all of you, category 2 shareholders should introduce cash of this amount, that is 10,50,000. Then we will give 8,88,462. Category 3 shareholders should bring 8 lakhs cash, should introduce 8 lakhs cash. Then I will pay 23,69,230. Now all of you please concentrate here. Net settlement I am talking. Net settlement. Category 1 shareholder, no need to bring any single rupee, but we will give 5,92,308. They need not bring any single rupee. But category 2 should bring 10,50,000, then only we will give 8,88,462. That means the net amount they should need to bring. How much amount they should need to bring? Can you please tell me all of you the difference amount? That is 10,50,000 minus 8,88,462. I got here 1,61,538. Now coming to category 3 shareholders, if they bring 8 lakhs, then I will distribute 23,69,230. That's why no need to bring. I will distribute the remaining balance only. That is 23,69,230 minus 8 lakhs. I will distribute the remaining amount, which is 15,69,230. This is the net settlement. If you observe in model number 1, that is method number 1, for category 1, I distributed net distribution 5,92,308. Here also 5,92,308. Here they should bring 1,61,538. Here also they should bring 1,61,538. Here we are distributing 15,69,230. Here category 3 also we are distributing 15,69,230. Do you understand under both the methods how we are in general distributing cash among the various equity shareholders? In method number 1, rather than distributing the surplus, we are calculating the loss, the expected loss. Surplus, we are having 20 lakhs, but the paid up value is 79 lakhs. Rather than distributing the surplus, we are distributing the expected loss among the various equity shareholders. Then you can easily get the net distribution among the various parties. No, sir, I can't understand that method properly. Then you can apply this concept. Let us assume if I made the notional call to make it all the equity shares as same paid up value, then category 2, category 3 equity shareholders, I will make a call, which is a notional call. Then I will get 38,50,000. Then you can distribute equally. You can distribute equally means based on their equity shareholders, you can simply distribute. Then category 2 and 3 should bring as well as we are giving. Now we are only checking the net amounts only for category 2 and 3. The net amount is 10,50,000 minus 8,88,462. Then they should brought to the organization. Then they should introduce such cash to the company. Now coming to category 3, they should need to introduce 8 lakhs. Then we should need to distribute 23,69,230. Then we are not asking money. We are giving a net amount only. That is the difference of 15,69,230. Hope now you understand how the distribution of cash among the various parties of the equity shareholders are in generally occurred. Next, one more thing, guys. One more problem is there. I will take up one more problem for the discussion, which is problem number 7. The speciality of this problem is face value is not equal. If you observe 100 rupees face value, 50 rupees face value, 10 rupees face value. Then how to distribute surplus available with the liquidator after payment of all the liabilities of 12 lakhs. Then distribute this surplus money among different categories of the shareholders. Now the liquidator in the process of doing realizing assets and making payment to the different liability holders. Now at the time of making distribution to the various equity shareholders, how he should act, he is asking in the question. But from problem number 6 to problem number 7, the difference is here all the face values are equal. Here all the face values are different. That is the only difference. Now let us have a look. I already told you this problem we are going to see. That is another method. Before break I told you. So we will going to see another model of the problem. That is in case if different face values are there, then how we can tackle that situation. Come here, problem number 7. I will explain that situation through problem number 7. In the same way, there is no change at all. Please all of you observe here. That's it. Okay. Now here also, let me follow method number 1, guys. So for problem number 6, I done the problem in both the methods, but problem number 7, I will only done in method number 1. Particulars, category 1, 2, 3. Right? So first you can start with number of equity shares. number of equity shares 15,000, 40,000, 2 lakhs. These are number of equity shares. Am I right? Next, face value per share. How much? Face value per share, that is 90 rupees. Oh, that is paid up value, sorry. 150, 10. 150, 10. Next, paid up value per share given how much? 90, 25, which is fully paid up, that is 10 rupees. Now all of you please concentrate here. Sir, if the face value of all the equity shares are same, then we can simply adopt the above process, right? If all the face value here for all the number of equity shares, the face value per share is same, 100, 100, 100, but only there is difference in paid up value. But here there is difference in face value as well as paid up value. If for this problem, for all the categories, if the face value is 100, then we can apply the old method. Then we can apply the procedure what we followed in the old problem. Now to make it the face values equal, I will make it consolidate 2 shares into 1 share. If I will make it 2 shares into 1 share, number of shares will become 20,000 and face value will also become 100. Do you agree? Sir, here if I consolidate 10 shares into 1 share, if I consolidate 10 shares into 1 share, then the number of shares will become 20,000 shares. Here I consolidated 2 shares into 1. Here I consolidated 10 shares into 1. Such number of shares are known as equivalent number of shares. Equivalent number of shares. Now if you observe, all of you please concentrate. Now in your mind, the number of shares are 15,000, 20,000 and 20,000 and the face value is 100, 100, 100. But the actual face value is different. But only for the purpose of calculation, we are entirely doing the problem on the basis of equivalent number of shares. Now, let us all of you calculate the total paid up value in the as usual manner. That is total. First, you can write the total face value, right? You can write the total face value first. So the total face value, which is 15,000 into 100. You can multiply these figures only. 15,000 into 100, how much? 15 lakhs. 40,000 into 50, which is 20 lakhs. 2 lakhs into 10, which is also 20 lakhs. Now you can compare with paid up value. 15,000 into 90. So I got 13 lakh 50,000. Here 40,000 into 25, which is 10 lakhs. Next, one more thing, 2 lakhs into 10, 20 lakhs fully paid up shares. Now all of you please concentrate. In the problem, surplus amount is available. How much is given? Surplus is given in the problem is 12 lakhs. Am I right? Now the total face value is 55 lakhs. Total is 55 lakhs. And the total paid up value is how much? $13 lakh 50,000 plus 10 lakhs plus 20 lakhs. The total paid up value is 43 lakhs 50,000. Now all of you observe here. Sir, surplus available is 12 lakhs, but the paid up value need to be already paid by the equity shareholders is 43 lakh 50,000. Therefore, expected loss is how much? Expected loss is how much? The difference, surplus of 12 lakhs. If I distribute among the equity shareholders, still equity shareholders would end up with a loss of 43 lakh 50,000 minus 12 lakhs, which is equal to 31 lakh 50,000. Now such 31 lakh 50,000, I need to distribute in equivalent number of shares ratio. I need to distribute in equivalent number of shares ratio. Now, if you check here, equivalent number of shares, because the face value is same in case of equivalent number of shares only. Now, the ratio is 15 is to 20 is to 20. That is 3 is to 4 is to 4. 4, 4, 8, 8, 3, 11. 31 lakh 50,000 into 3 by 11, which is 8,59,091. Here 31,50,000 into 4 by 11. Here I got 11,45,455. 31,50,000. Here also 11,45,444. For one thing, you can put a 444. Okay, which is total equal to 31 lakh. Here 446, not 5. How much here? 444 only. Total should be equal to 31,50,000. Yeah. Okay. This is 31,50,000 is the total. So the only difference between the previous problem and this problem is the expected loss of 31,50,000. You should not directly distribute on the existing shares because existing shares face value is different. But for the equivalent number of shares, the face value is same, right? That's why you need to distribute in equivalent number of shares ratio. That is the only difference. Okay. Now you can compare the paid up value with expected loss, which is 13,50,000 minus 8,59,091. So I got here 4,90,909. Yes. Next here 1,45,455. 1,45,455 need to contribute by the category 2 shareholders. Coming to category 3, 20 lakhs minus 11,45,450. Sorry, 454, not 444, 454. So here I got 8,54,546. So what is the meaning of this? Category 2 shareholders should introduce cash to the extent of 1,45,455. Then category 1 and category 3 shareholders, total they will get like this. The surplus is 12 lakhs na? Surplus is 12 lakhs. If they introduce 1,45,455, then the total cash available with the liquidator will become 13,45,455. Out of this, category 1 shareholders will get 4,90,909 and category 2 shareholders will get 8,54,546. That is the method of distribution you need to be adopted at the time of distribution to shareholders if the face values are different and if the face values are equal. Two methods are there. Whichever method you are feeling comfortable, you can follow such method without hesitating. Now hope you understood this concept, everyone, right? What are the queries you have? All such things are resolved, right? Clear, right? Sir, why negative figure is considered as cash to be bought? Guys, please all of you apply the common sense, guys, here. Why the negative balance is a cash bring? Why the positive balance is a surplus? Sir, this is the paid up value. This is the paid up value, right? Just a second. Pen is not working. So just be hold for a second, guys. Pen is not working properly. What happened to this? Pen is not working or my OneNote is not responding? OneNote is not responding. Just a second. It was completely hanged out. Audio video fine, but OneNote is not working. Yeah, now it's working. Fine. Now come back. Please concentrate. Please concentrate, guys, here. Sir, why we are putting a negative figure? Some students are asking. Sir, we are having a paid up value of 43,50,000, right? The expected loss we are distributing here. That means once if you distribute the loss from the paid up value, if you have a positive figure, which is the total amount paid by the shareholders, which is we are unable to make repayment to them. Now the difference of amount is nothing but the repayable amount. If the difference we are getting as a positive, which is repayable amount. If the difference we are getting as a negative, then we are not repaying. The other shareholder need to repay. Do you understand? Now, which we are actually reducing the loss. After reduction of the loss, still the party is getting the negative figure means still he is end up with loss means our company will not provide anything to the shareholders. Such shareholders should need to contribute. Hope you understand right now. Okay. Sir, method 2 is easy. Yes, I too agree. Method 2 is dead easy. But the problem, I will tell you why I am doing the problems only under method number 1. Sir, if the figures are very much bigger, then you should make the notional call every time. You should need to cross check, that is how much amount of the net settlement we need to be done. For example, if you apply method number 2 in problem number 7, it is too much of difficult because you need to check the equivalent number of units concept. You need to inculcate such process under method number 2 as well. Okay, so no issues. Sir, in institute recognized both the methods, whether you followed method number 1 or method number 2, that is up to you. Whichever is very much easy in your point of view, you can simply adopt that method, guys. Next, one more thing, sir, we have to make equivalent shares in face of fully paid up shares. So sorry, I can't understand. Sir, whether the shares are fully paid up or partly paid up, that doesn't matter, guys. I need only one thing. All the equity shareholders should get the same face value. That is only my idea. For example, if you want to convert all the equity shares into face value 10 rupees is also okay. Here, I converted all the equity shares into 100 rupees face value, right? For example, if you want to make it convert all the equity shares into 10 rupees face value, then what should I need to do? For these 15,000 equity shares, I need to split 100 rupees face value. Each share is split into 10 shares. Then it will get them 1,50,000. Now 50 rupees face value equity shares split it into 5 shares. Then 5 into 40,000, it will become 2 lakh equity shares. Then all equity shares will become 10 rupees, 10 rupees, 10 rupees face value. Here, my requirement is just to put the entire equity shareholders to get the same face value. Then I can adopt the procedure as like in the previous problem. That is the only method. That is the only requirement I should need to get. Okay. Fine, guys. How to do equivalent unit? What you learn in your costing, man? Someone is asking, sir, how to get the equivalent unit? That's very dead easy. Not an issue. I will teach. Please concentrate here. Sir, how to get equivalent unit means that is very easy. Now we are taking base as 100 rupees face value per share. Now category 2 and category 3 shareholders also need to get equivalent to 100. Now 50 rupees face value, how it will get 100 rupees face value? By multiplying with 2. Now you had to divide 40,000 divided by 2. Now how 10 rupees face value will become 100 multiplied with 10? Now you can divide with 10. Do you understand? 50 rupees share to become 100 rupees share, you should multiply with 2. Then to get the number of shares, you should divide. For 10 rupees share to become 100 rupees face value, you should multiply with 10. To get the number of shares, you will divide with the 10. Then automatically you will get the number of shares, equivalent number of shares. So that is not the new concept. You would have learned such equivalent number of units concept under process costing, maybe in your costing. If I am right, I'm not the costing faculty. So almost there is a huge gap, almost 9 to 10 years gap after completion of my CA course. If you take that is a CA inter in process costing, it took approximately more than 10 years gap. Am I right, guys? Is it in your process costing equivalent number of units is there? Yeah, fine. Sir, how 35 was come in question number 6 in second method? Wow, so many doubts here. Why you are having these many doubts here? Okay, you are not allowing me to proceed to the next concept. Okay, let me explain, sir, how 35 was come in question number 6 in second method. Where is the second method here? Which one is asking about 35? This 35, nah? You are asking. Oh, my dear. Sir, here paid up value is how much? 40. Here paid up value is how much? 65. What is our concept in method number 2? All the equity shares are putting at a same paid up value. Then we can distribute surplus equally, right? That is our mechanism. Now, the 40 rupees paid up value, to make it the 75, I need to make a call at how much? At the rate of 35. That's why I multiplied with 35. In the same way, to make it 65 rupees paid up value into 75 rupees paid up value, I need to pay how much call? I need to call how much? 10 rupees per share. That's why I multiplied with 10 rupees. Okay. That's it, guys. Okay, hope you understand distribution of cash among the various equity shareholders. I hopefully almost spend more than 30 to 40 minutes on distribution among the different equity shareholders, but this is highly important. In liquidator final statement, most of the times, he may stretch such point, then you can easily distribute the cash among the various parties of the equity shareholders like in this way. Okay. Actually, I'm in the process of analyzing the things of the liquidator final statement. Now I'm almost at the final stage. I discussed everything except the concept of preferential creditors. Please, all of you, come to that part, that is overriding preferential payments and preferential creditors. Just I will tell you. But before taking the liquidator final statement problems, just let me allow to explain overriding preferential payments and preferential creditors. So the next concept is overriding preferential payments first. Then after that, I will explain preferential creditors, which is section 326 of the Companies Act 2013. So which is a little bit technical, guys. Please all of you concentrate here. I will explain such overriding preferential payments concept through my text. All of you come here. Overriding preferential payments, section 326. Sir, already preferential creditors you told. Again, what is this concept of overriding preferential payments? I mean, preferential creditors concept not explained. Just I introduced the word. What is the meaning of preferential creditors? Preferential creditors are unsecured creditors. But even though such creditors are unsecured creditors, we should need to make payment before making payment to secured creditors with floating charge. We should give preference. We should give preference at the time of liquidation, at the time of making payment. Am I right? Now, overriding preferential payment means which should need to pay before making payment to all type of creditors. Overriding provisions means, sir, the provisions what we all are discussing are not applicable. This overrides remaining all provisions. That is nothing but overriding preferential payments. That means in the first instant itself, you should make payment to these parties. The parties who are prescribed under section 326, immediately you should make to payment. Who are such parties? Let us have a view here. In the winding up of a company, the following debts should be paid in priority to all other debts. In priority to all other debts as per section 326, which are workman dues. And where a secured creditor has realized a secured asset, so much of the debts due to such secured creditor as could not be realized by him, or the amount of the workman portion is security, whichever is less, in pari passu with the workman's dues. I know you can't understand anything. Okay, from the given provisions, I know you are unable to understand any of the single provisions except this workman due. Okay, so just please let me allow for some time. I will explain each and everything. I will read some other issues as well. For the purpose of this section, workman in relation to a company means the employees of the company being workman within the meaning of section 2S of the Industrial Dispute Act 1947. Workman dues in relation to the company includes wages or salary, including wage payable, that is piecework or time rate wages, accrued holiday remuneration, or maybe amount payable in case of death or disablement of any workman of the company. No need to read the entire sentence. Just all of you check the highlighted sentences. Death or disablement of any workman of the company, and all sums due to payable to the workman from provident fund, pension fund, gratuity fund, or other fund maintained by the company. Now, come to my OneNote. Then I'll explain each and everything here. Sir, one thing, what is the meaning of overriding preferential payment? This payment should be made by the company during the process of liquidation in priority to all other debts. Priority to all other debts. No doubt about it. Now, let us assume machinery is there in my books of accounts. The realizable value of the machinery is 2,50,000. We get 2,50,000 through realization of machinery. Now, in my books, two payments are there. One is workman due. Another one is secured creditor with fixed charge. Secured creditors with a fixed charge. Sir, workman due is 1 lakh. Secured creditors with fixed charge is 3 lakhs. Workman due is 1 lakh. Secured creditors with fixed charge is 3 lakhs. Now all of you please concentrate here. Whenever you are realizing the security, I mean machinery, first you should make to payment to whom actually? Secured creditors with fixed charge. We already seen assets specifically pledged. Whenever you are selling, the amount first it should go to whom? Secured creditors with fixed charge. Now if you check the machinery worth 2,50,000, here it is there. But the secured creditors with fixed charge amount creditor is only 3 lakhs exist. Now, if you pay the entire amount to the secured creditors with fixed charge, let us assume the entire amount of the realization of the machinery. If you can make payment to the secured creditors with fixed charge, then secured creditors with fixed charge still is having 50,000. Now, such 50,000 you can make it termed as. Unsecured creditors. That is not the new concept, you know already. Because the security is not enough to cover the borrowing you taken. So that's why the remaining borrowings you can take it termed as unsecured creditors. You know that one, right? Now, as per the provisions of section 326, whenever you are realizing an particular secured asset, now such proceeds should be distributed among workman due. Such proceeds should need to be distributed among workman due and secured creditors with fixed charge also, according to their proportion in pari passu. What is the meaning of pari passu, sir? Pari passu means equal footing. Which is equal footing. Sir, equal footing means whenever you realize a particular security, you can treat workman due also in line with the secured creditors with fixed charge. I mean, this 2,50,000 you should need to distribute among the two parties. That is 2,50,000 into ratio 1:3 ratio. That is into 1/4 here. Here 2,50,000 into 3/4 here. Then can you please tell me workman persons how much they will get? 2,50,000 divided by 4 means they are getting 62,500, right? They are getting 62,500. Now secured creditors with fixed charge, how much they are getting? 2,50,000 into 3/4. They are getting 1,87,500. Please concentrate. Still the story is not at end. So 62,500 is available to workman due and secured creditors with a fixed charge. Available amount is 1,87,500. Still, how much balance is there under workman due? After making payment of 62,500? The balance in workman due is 37,500 here. What is the balance in secured creditors with fixed charge? Please leave out this 50,000. This 50,000 is anyway unsecured creditor, right? Out of such 3 lakh, 50,000 is unsecured creditors, means out of remaining 2,50,000. So just a second, what I made? Out of the remaining 2,50,000 in secured creditors with fixed charge, still how much balance is there? 2,50,000 minus 1,87,500. I have 62,500. Still balance is there. Now concentrate. The total secured creditors with fixed charge is 3 lakhs. But out of such 3 lakhs, available is 1,87,500. And out of such 3 lakh, you already paid 1,87,500. And the remaining 50,000, you already decided that which is an unsecured creditor. Remaining balance, how much is there? 62,500. Now concentrate. Why 62,500 balance is appearing under security creditors with fixed charge, you know? Due to making pari passu payment to the workman due. Due to making pari passu payment to the workman due. Now, to the workman due, you are paid to the extent of 62,500. Due to that reason, security creditor with fixed charge will lose to the extent of 62,500. Do you agree? If you pay entire amount of 2,50,000 to the security creditors with fixed charge, then the balance under security creditors with fixed charge would be the nil. Because, sir, out of this 3 lakhs, anyway, 50,000 is unsecured creditor, remaining portion is 2,50,000. For such 2,50,000, you paid the machinery. You are paid the realization from the machinery. Then the balance under the security creditor with fixed charge will become nil. But due to making pari passu payment to the workman due, now the balance under the security creditors with fixed charge is 62,500. Now, what is the meaning of overriding preferential payment? Concentrate. Overriding preferential payments is nothing but workman's dues. How much due is there still? 37,500 due is there, which is a overriding preferential payment as per section 326. And next, where a secured creditor has realized a secured asset, secured creditor realized a secured asset to the extent of 2,50,000. So much of debts due to such secured creditor as could not be realized by him. How much amount of such secured asset is not available to the secured creditor? Actually, the available amount is 2,50,000. But right now, due to making pari passu payment with the workman due, the available amount is only 1,87,500. How much amount is not available to the secured creditor with fixed charge? 62,500. Okay. Where a secured creditor has realized a secured asset, so much of the debtors due to such secured creditor as could not be realized by him. Please leave all of you this. He could not be realized by him due to pari passu with the workman dues. Due to making pari passu payments with the workman dues. Now, if you observe here, due to making equal payment with the workman dues, how much amount is lost by the secured creditors with fixed charge is nothing but 62,500. These two things are, we can make it term it as overriding preferential payments. So that means whenever workman dues are there, such workman dues should be paid in line with secured creditors with fixed charge. That point first you should need to know. That is not a overriding preferential payment. That is not a overriding preferential payment. Overriding preferential payment means the remaining workman dues after making equal footing with the secured creditors with fixed charge, the remaining workman due and how much amount is foregone by the secured creditors with fixed charge due to making equal footing with workman due. That is 62,500. Both combinedly we can call it as overriding preferential payment. Do you understand, all of you? Okay. So friends, just please allow me 2 minutes, guys. So just please, all of you, please hold for 2 minutes. I'll be back within 2 minutes. Just please, all of you observing the concept. Within 2 minutes, I'm attending the session. So just I'm making invisible my video. So please, all of you check this concept. Within 2 minutes, I will come. We will do the problem on this concept. Guys, I am back. Concentrate here. Sir, what is the concept of overriding preferential payments is all about? Still some persons are asking the doubts. So just I'm clarifying. So before knowing the overriding preferential payment, first you should know one thing. Whenever you are realizing cash from a secured asset, that cash is not only available for the secured creditors with float fixed charge, that is also available for workman due equally in equal proportion. That is the right given to the workman due as per the Companies Act 2013. You know why? Workman means who are the labor actually. They are coming on the daily basis, on the piecework basis or the time rate wages, just we are paying. So at least during the process of liquidation of company, it is the duty of the company to give payment in the first instance. Who ultimately lose, who actually suffered more, much more due to the liquidation, such persons, because they are the daily labor, so they are not having the food, shelter and all other issues, right? So that's why to protect the interests of such parties, whenever you are realizing an asset which is secured creditors with fixed charge, even though which is exclusively available for that particular secured creditor with fixed charge, but still such amount is equally available for workman due as well. Sir, who are all covered as a workman due? So we already read certain points. That is workman who are covered under the Industrial Dispute Act, which dues covered under the workman's due, that is piece rate wages, time rate wages, holiday remuneration, so death or disablement compensations, am I right? Which are all mandatory. Next, we've seen certain provident fund, okay, certain gratuity fund available to such workman's dues, all are put together. We can call it as workman due. Now, whenever you are realizing a particular secured asset, that is now in this case 2,50,000, which is available for both the parties. That is 2,50,000 into 1:3 ratio. That is 2,50,000 into 1/4 is 62,500 available to workman persons, and 3/4 portion is available for secured creditors with fixed charge, which is 1,87,500. Now the question is, these are not the preferential these are not the overriding preferential payments. The overriding preferential payments is still how much workman due is still balance is there. Now in preference, you should need to pay the workman due. That is 37,500 is the remaining. Next, sir, first always you should make payment whenever you are realizing cash from secured creditors with fixed charge. You should make payment to the workman due and such secured creditors. After that, the next issue I am talking. After that, the next issue, you should need to make to payment to the workman for the remaining portion, 1 lakh minus 62,500, which is 37,500, which is overriding preferential payment. In here, it is clearly given workman's dues is a overriding preferential payment. That is 37,500. Next. Secured with creditor with fixed charge, how much he foregone due to making payment to the workman due? Sir, workman due, you paid 62,500 now. On behalf of making payment to the workman due, such 62,500, if you pay the entire amount of 2,50,000 to the secured creditors with fixed charge, then secured creditors with fixed charge discharge to the extent of 2,50,000. But right now you only discharged to the extent of 1,87,500 only. Earlier you would discharge the 2,50,000, but now you discharged only 1,87,500. The difference of the amount actually foregone by the secured creditors with fixed charge due to making pari passu payment to the workman due, due to making equal footing payment with the secured creditors with the fixed charge. Such 62,500 is also, you can take it as a overriding preferential payment. Now, if you read here, workman due is a overriding preferential payment. So please, all of you ignore this sentence. If you read this, you might confuse. Please ignore this. Now, where a secured creditor has realized a secured asset, yes, 2,50,000. So much of the debts due to such secured creditor as could not be realized by him. How much portion of the secured debts is unable to realize? Actually, 2,50,000 need to pay but we pay only 1,87,500. The difference of amount he is unable to realize, which is 62,500, he is unable to realize. Such 62,500, why he is unable to realize? In making pari passu with the workman dues. Due to making payment to the workman dues equally, he lost such 62,500. Such 62,500 is also treated as a overriding preferential payments. Now, workman here for this purpose only covered under those employees which are covered under Industrial Dispute Act. Workman dues means either piece rate wages, either time rate wages. Workman dues is also inclusive of holiday remuneration. It is also inclusive of death or disablement compensation. It is also inclusive of provident fund, pension fund, or the gratuity fund, whatever the case may be. Do you agree, all of you now? Now let us see one problem for better understanding. Then you will get much more clarity. Problem number is 2. All of you come to problem number 2. Please quickly, guys. I'm reading problem number 2. Amounts payable in winding up of a company are as follows. Security creditors 1,25,000. Workman due 2,50,000. Show the payments made and the treatment of balance in the following 2 instances. The security realized is 2 lakhs. If the security realized is 1 lakh. Okay. I'll put the facts in my OneNote first. Column number 2, right? Now let me take case number 1 first. So realized, security realized how much? Security realized. Your security means secured asset. Okay. Secured asset realized how much? 2 lakhs. But the workman compensation due is there. Workman compensation due is given 2,50,000. Next, security creditors is there for 1,25,000. Security creditors is there for 1,25,000. Now, what is the ratio, guys, with workman compensation due and security creditors? What is the ratio? 2:1 is the ratio. Am I right? Am I right, guys? The ratio is 2:1. Now, out of the realization of 2 lakhs, workman compensation due 2/3, for security creditors 1/3. That is 2 lakhs into, here you can calculate, here 2 lakhs into 2/3. Here 2 lakhs into 1/3. So 2 lakhs into 2/3, how much, guys? 1 lakh. 1 lakh. 33,333. Here 66,667. Now, once you realized the secured asset of out of 2 lakhs, 1,33,333 need to be payable to workman. 66,667 need to be payable to security creditors. Now, what is the balance under security creditors? What is the balance under security creditors? Can you please check? 2,50,000 minus 1,33,333. The difference is 66,667. Balance is there under workman. Now here, how much balance is there? 1,25,000 minus 66,667. Tell me, guys, how much balance is there? This is not 66,667. Yeah, sorry, this figure wrongly made. 2 lakhs divided by 3 is, I am getting, oh sorry, same now. So many arithmetical errors today. Okay, sorry. This is not 66,667. That's why I confused. So 2,50,000 minus 1,33,333. Here I got 1,16,667. Here I got 33,333. Am I right? This is also not 33,333. This is how much? 1,25,000 minus 66,667. 58,333. Am I correct, guys? All of you? Can you please cross check? So from the given information, the security realized is 2 lakhs. So I have 2 lakhs realization. Workman compensation due is at 2,50,000, and security creditors is given at 1,25,000. Actually, if I give the entire security to the security creditors, entire amount is vanished. Entire amount of the security creditors is vanished. But right now, the security is available for both the parties in the ratio of 2:1. Then 2 lakhs into 2 by 3, I got 1,33,333 for workman compensation due, and for security creditors, which is available 66,667. Then the balance of the workman due is 2,50,000 minus 1,33,033, which is 1,16,667, and the balance of the security creditors is 58,333. Now, what is the amount of preferential creditors here? What is the amount of preferential creditors? Now concentrate, guys. The remaining balance of workman due is a preferential creditor, which is 1,16,667 plus. Sir, due to making pari passu payment to the workman due, still how much amount is unable to make payment to the security creditors with fixed charge? 58,333 amount unable to make repay. If you pay out of this entire 2 lakhs, 1,25,000 to the security creditors, the entire 1,25,000 gone. But due to making pari passu payment to the workman due, still there is a balance under security creditors with 58,333. This 58,333 balance is there due to making pari passu payment to workman due, which is also treated as preferential creditors. So the total amount of the preferential creditors is equal to 1,16,667 plus 58,333. So I got 1,75,000 is the overriding overriding preferential creditors or overriding preferential payments. This is case number 1, guys. Come to case number 2, all of you. Here 2 cases given now. If you check in case number 2, the security realized is at 1 lakh. How much security realized? 1 lakh. Now the security realized is 1 lakh. Same, there is no change in workman compensation due, which is 2,50,000, and there is no change in security creditors with fixed charge, which is 1,25,000. First, you need to observe one thing. From the realization of the secured asset, if you will make entire payment to the security creditors with fixed charge, still not enough. That means out of this 1,25,000, 25,000 is straight away unsecured creditors. I don't want to talk about that 25,000. I will only talk about this 1 lakh only. I will only talk about this 1 lakh. Why? Because 25,000 is straight away unsecured creditors. But if you check, there is no unsecured creditors under security creditors with fixed charge portion, because the entire 2 lakhs is available for 1,25,000. We can make repay. But here, even though entire 1 lakh is available to security creditors with fixed charge, still we may not repay the entire amount. So that's why 25,000 is the unsecured creditors. Do you agree? Now, the ratio is 2,50,000 is to 1,25,000 means again 2:1. The ratio is again 2:1. Then you need to distribute here 1 lakh into 2 by 3rd. Here 1 lakh into 1 by 3rd. Sir, here 2 by 3rd means 66,667. Here 1 by 3rd means 33,333. Now, if you cross check the balance due 2,50,000 minus 66,667 is equal to how much? How much, guys? 2,50,000 minus 66,667. So I got 1,83,333 here due. Here 1,25,000 minus 33,333. 91,667. But one thing you need to remember, out of this 91,667, straight away unsecured creditor how much? Straight away unsecured creditor is how much? 25,000. Remaining balance, why it is came, you know? Remaining balance, making pari passu payment to workman due. Right? The remaining balance is how much? 66,000. 667. Now, what is the meaning of overriding preferential payments as per section 326? Section 326, overriding preferential payments is equal to balance in workman compensation due, that is 1,83,333 plus to that extent of balance of secured creditors with fixed charge is unable to repay due to making pari passu payment with workman compensation due. That is nothing but 66,667. Don't take this balance, guys. Why? Because this balance is 25,000. Maybe if you pay the entire security realization to the secured creditors with fixed charge, still 25,000 balance is there. Still 25,000 balance is there. That means this 25,000 balance is there, not with pari passu payment. This 25,000 balance is there anyway if you offer entire realization from security to the secured creditors with fixed charge. Do you understand? That's why only you can take this part. This is unsecured creditor. So secure overriding preferential payment is equal to total how much? 1,83,333 plus 66,667. Total is 2,50,000. And what about this 25,000? This 25,000 is unsecured creditor. Unsecured creditor is equal to 25,000. So like this, you need to present. He asked, show the payments made and a treatment of the balance in the following two instances. Here, the treatment of the balance, the entire balance is overriding preferential payment. But here, out of the entire balances, these two portions is only the overriding preferential payments. And this portion is 25,000 is unsecured creditors. Hope you understand, guys, all of you. Am I right? So please don't log out, anybody. So tell me one more thing. Okay, here itself. What is that? Preferential creditors, which is very much easy. All of you, section 327, which is preferential creditors. Till now, we've seen what is the meaning of overriding preferential payments. Now we are discussing about the preferential creditors. Preferential creditors. There is a difference between overriding preferential payments and preferential creditors. Sir, what are covered under preferential payments are preferential creditors? Government taxes, salary and wages, holiday remuneration, contribution under ESI Act, compensation in respect of death or disablement, PF pension fund and gratuity fund, expenses of investigation. Sir, out of which we already seen certain portion under overriding preferential payment. No, that is related to workman as per Industrial Dispute Act. Here who are covered? Either workman or employees. Or especially here only cover the employees other than those covered under the Industrial Dispute Act. The employees or the workmen who are not covered under the Industrial Dispute Act will covered here. That means the lower level of the labor are covered under Industrial Dispute Act, and the higher level of employees and the mid-level management and the lower level management all are covered under here. So now, government taxes. Sir, is it entire taxes to be payable? Can I call it as a preferential creditors? No. From the date of liquidation, preceding 12 months only, I can call it as a preferential creditors. From the date of liquidation, preceding 12 months, what are all the different taxes I need to be payable? Taxes, cess, duty, municipalities, for any payment, municipal taxes, what are the payments you need to be payable by the company? What are the amount need to be payable in the form of tax to the government? Such all things we can call it as preferential creditors only. Coming to salary and wages, preceding date to the liquidation, out of 12 months, only 4 months salary only we can treat it as preferential creditors. Only 4 months salary we can treat it as preferential creditors. If you check here, all wages are salary, including wages payable for time rate or the piece rate, whatever the case may be, by way of commission of an employee of the services rendered to the company and due for a period not exceeding 4 months, within the 12 months, immediately before the relevant date. That means from the date of liquidation, within preceding out of the 12 months, only maximum 4 months salary only we can treat it as a preferential creditors. Holiday remuneration entirely covered, contribution under ESI in respect of death or disablement, PF pension and gratuity, and investigation expenses, all these are form part of preferential creditors. There is a difference between overriding preferential payment and preferential creditors. Overriding preferential payment covered work are quite different, which are as per Industrial Dispute Act, but here under preferential creditors who are all covered, Even though salaries, wages are there, those are nothing but employees covered other than Industrial Dispute Act. So that's why we will give first preference to overriding preferential payments, next preference to the preferential creditors. So taxes, salaries and wages, holiday remuneration, contribution to ESI, PF, pension, gratuity, death or disablement, compensation, investigation expenses. But one thing, out of all the government taxes, only preceding 12 months taxes only you can consider as a preferential creditors. And coming to the salaries and wages, out of 12 months, only 4 months salary only you can consider as a preferential creditors. So actually there is a necessity to do one problem on the preferential creditors, but we are running out of time. So we will see the concept, that is, we will see the problem on preferential creditors in the last lecture. Sir, the one more lecture we have, that is after 2 days, I think so, as on 21st, which is the final lecture. Before that, just I want to tell you one thing, guys. So liquidation of companies is also a bigger chapter as like other chapters. So the time is very insufficient to me. You can, all of you, do what are all the things till now we made under the liquidation of companies. With that basis, you can please all of you complete the problems. It is possible. For example, I will take one problem for the discussion right now itself. We can easily complete. In which sequence of the following payments will be made while preparing the liquidator statement of account? Sir, just they asked the sequence of payment in the liquidator final statement of account. What is the sequence? Can you please tell me? First, you should make payment for the legal charges from the given sentences. Next, debenture holders, if these are the secured creditors with floating charge. Next, unsecured creditors. Next, preference shareholders. Next, equity shareholders. Then problem number 1 is over. Problem number 2 is already done, right? Problem number 3 is related to preferential creditors. Just a moment, please, all of you hold. If time permits, I will discuss right now itself. Just a second. Problem number 4 is list B contributories and not yet touched. Problem number 5 is related to liquidator remuneration. We need to do. We already discussed the concept of liquidator remuneration. Now we can complete the problem on liquidator remuneration, but I will not do right now. I will do at later stage. Problem number 6 and problem number 7 already completed. Remaining problems are related to liquidator final statement as well as statement of affairs. We can easily complete in the next lecture. But before closing the lecture, can I take the preferential creditors? Is it okay for you, all of you? For you, if it is okay, I will take up. Otherwise, I will take up in the next lecture. Please, all of you, let me know. Can I take up or can I close? Because your time is precious to me. Okay. So, some persons are telling that, sir, we are running out of time. Okay. No issue, guys. Problem number 3, I will consider in the next video lecture. So, preferential creditors. And one more problem is there now, liquidator remuneration. First, I will take up such 2 problems. Then I will go for the other discussion. I will upload each and everything under the PDF corner. You can make it download. And as per my assurance, I will upload it after completion of the final lecture. The entire portion of advanced accounting as well as accounting, I will upload my material for your better reference. Okay, guys. Bye. All of you have a nice day.